Hello, everybody. Welcome
Hey,
back to
hey.
Crypto Talks. Yeah, I'm sorry, I'm a bit off today. I'm gonna be dead honest. Bad day. But we're here. Yay! We're doing Macro Tuesday, and we're gonna be talking about all kinds of things today. Um, and we haven't really looked into exactly what we want to talk about in detail, so we thought we would kind of just wing this one. Um, but I think it will be good. I was gonna show some heat maps here for crypto and stocks, and we're going to look at some aggregated inflation since 2020, I think it is, in both the UK and in the US. I would say the UK one is probably well, it's worse, but it kind of speaks for the entire European markets, I would say. Or
Yeah, to an extent, yeah.
yeah, um, we're gonna look at all that stuff, which is
Some
gonna be
house
fun.
stuff. Yeah.
Yes, and some housing stuff, and some other stuff that are comprised of stuff that we will talk about. Anyway,
Fun stuff.
yes. By the way, make sure you guys leave a like already. Please do, because that will bring some more people in and all that. It's gonna be good. Let's see. Where do we begin? Let's start off with looking at the crypto coins heat map. I'm gonna steal this from TradingView. So this one is year to date, and there are some things that like the reason to want to talk about this is in our last stream we were talking about how you need to be able to really pick. You need to know what you're looking for. Find alpha, find the strongest names, and so on. And looking at a year to date heat map like this will kind of give you a good overview of what is, if Bitcoin is up and everything that goes up with Bitcoin is kind of still alive in a way. Um, obviously BNB here, for example, which is down 6.4% year to date when Bitcoin is up 130%. It's not that BNB is dead. It's more like a lot of kind of black swan stuff that's happened and that's held that price down, I think.
Yeah,
I mean,
coupled with the fact that it had a ridiculous bull run.
oh yeah,
That's that's something to bear in mind. Is that it's held its price up probably a little too well. If you think, in at the peak of 2021, it was a similar market cap size to Solana at its peak.
Yeah.
Something like 70-80 billion for what is essentially an exchange token, and
Yeah.
it was a plaything for shitcoins. We had
Yeah.
the amount of things like SafeMoon and stuff launching on BNB because it was cheap and easy to just launch utter garbage on, and it probably definitely should have had more of a correction than it has done relative to other coins, as particularly of its size and given its utility. It's been held up by the fact that Binance obviously owns a lot of it, but you can see that now it's really struggling to gain any momentum upwards because people are just going to looking at it, and like you say, that there are other things that are up, and people aren't going to hang on to a losing horse. And
No.
if they they'll get rid of something which is continuing to underperform, and that's going to weigh down heavily on BNB's price. And you can maybe we can take a quick look at BNB's price. I know it's not TA Monday, but
we can definitely do that.
But it is something to bear in mind, and this applies to a lot of other coins here as well. So you have to consider that how much room it's got to move up and down.
Yeah, no. So the thing that worries me about this is that we do have something like Polygon that's actually down year to date. Not much. It's basically flat year to date. And Polygon, that's a serious thing. Then you have to start questioning, like, why is it down that much? Why hasn't it moved with everything else? These are questions that you're gonna have to start asking. I mean, even I'm not gonna say even Cardano is up, but yeah, even Cardano is up. I would be. I'm more surprised about, and I'm not surprised Cardano is up. I'm more surprised that Polygon is not up. And at the same time, you have XRP is up, Solana is up massively, Avalanche is up, Chainlink up, and that was just a recent kind of move. It was kind of flat for a long time there. But
Chainlink has been making people unhappy for years.
yeah, and I mean something like where is it? Oh gosh, I can't remember.
Down for the year. Yeah,
I can't remember all the logos. But yeah, no. So we have some stuff, but mostly you can see crypto market is up, right? Crypto market overall is up, pretty hefty. And then looking at the stocks here, and this is also year to date. Obviously the big names like Microsoft, Google, Apple, Nvidia, and Meta, Amazon, and Tesla, Visa, all these they're up. The big names are up. Smaller stuff, well, I'm not going to say all this stuff is small, but you know what I'm saying, right? The big alpha names are, pretty much heavily in the green. I mean, Nvidia 220%, Tesla 107. I mean,
yeah.
Crypto tends to make bigger moves. It doesn't take much for the smaller names in crypto to be green, so to speak.
No, but it's
especially not after a huge crash.
I heard a statistic that Apple and Microsoft alone have raised their market cap in the last 4 weeks by something like $800 billion. Mm-hmm. So, getting on for more than, as much as the entire crypto market cap, more than Bitcoin's whole market cap, Microsoft and Apple alone have just tacked on in a matter of a few weeks. Yep. Now, this is a problem that we're seeing is, although you look at the stock market and it's up, it's not far away from all-time highs, and yet the only real players that have moved have been Apple, Microsoft, Google, Amazon. These mega giant corporations are just sucking they're dragging the rest of the market along. They're sucking money in, and they themselves are now in a situation where it's like, well, when you buy the S&P 500, you're supposed to be buying an index. You're supposed to be buying a wide array of companies, and the problem is that because all this money is going into just a few companies at the top, then they take a bigger and bigger slice of that pie, and the S&P 500 suddenly ends up just becoming an index fund for these companies, not the rest of the market. The rest of the market is just is almost negligible relative to the performance of these giants, and so the S&P isn't then measuring real growth. It's measuring it's just measuring concentration of wealth into a few very safe plays, and this isn't a healthy sign. This isn't something that we should see in a fully functioning and expanding risk-on economy. These are defensive plays. These aren't risk-taking plays. And it's although it looks like everything's fine according to the stock market, everything's fine. I've got a feeling it's going to keep going, and the blackout period for stocks is ending around now. You've got a lot of companies that will want to put some money on the balance sheet before the end of the year, get their nice hefty bonuses for the stock meetings. Well, we laugh, but it's true. This stock performance is something that people get measured on, and doing a nice stock buyback at the end of the year to pump your stock up to all-time highs is it's a very nice money spinner for executives that have stock. And we know it goes on. It's a bit annoying. Well, it's very annoying to see all that money just going into shares rather than actually going into economies and actually doing something worthwhile. It just goes into this index fund and doesn't come out. The problem, of course, with averaging into index funds is that when things drop, when things get bad and there starts to become net outflows for whatever reason, these mega companies are the ones that bear the brunt of the selling. So they fall just as much as everything else. And we saw instances of that in 2021. You saw the likes of Facebook drop, Netflix dropping huge amounts after the money dried up. Things things can crash hard, and it is very possible we see something similar.
Yeah.
I'm going into the future, not saying it's going to happen imminently. You're right now, an uptrend's an uptrend, but big picture, is worrying.
Yeah, I mean it's also kind of funny because I actually spoke to a couple of people today about they asked me about like if they should get into crypto and this and that. Obviously I'm happy to talk about getting into Bitcoin, for example, for somebody who's new. And I asked them, so what are you currently in? Well, I'm in like these funds and index funds and all that. So almost everybody is in, they're buying S&P, they're buying other, like in Sweden here, they're buying a bunch of other stuff that's just completely useless, basically. And they're like, oh, do you think I can make more than 18% or more than 15% a year on Bitcoin? And I'm like, I mean, maybe. So, but I also said, you don't have to go into crypto. You can still, instead of buying an index fund, make your own index, right? Find the best names and just take those, take the top 5 from the S&P and NASDAQ or whatever, and just put it in there, put it in those 5, and you would have made like 100% this year instead of 18.
I've got a stock trading app on my phone, and that has pies that people put together that you can subscribe to. And you look at it and you go, I don't know some of these companies, but I know the general genre. Yeah, okay. It's another way of investing. Yeah, crypto is not the only thing. It's not the only technology. It's not the only development going on in the world, and so there's going to be periods where other sectors move much more rapidly and grow to grow more than crypto. Crypto will continue to grow, but especially there's no real way of valuing most of these things, and
it's very difficult to value a crypto project like because Solana and all that.
Like any of them, like any of the 20,000 coins, how can you measure whether something is worth 50 million or 100 million or $1 billion at market cap?
I think the problem is that a lot of people try to use the exact same way that they value stocks, for example. With earnings, this and that, and all that. You can't really, like, people are still figuring out ways on how to value Bitcoin, how to value ETH, how to value Solana. And like all you really can do is try to figure out what people need, what it can do for people, just like a stock would. But it's like we had this discussion before, right? Didn't we? You and I, we were talking about like why would people buy and hold Solana, for example? And I'm like, well, there's no point in it. It's just speculative. And I'm like, well, if you just buy stocks, it's like you can't really do anything with the stock except just hold it, right? With Solana, you actually need it for something, right? So that is one of the points you can look at to try to value it. But then the argument you had for Solana was like, well, if Solana is so cheap to use, like an average user might just need 1 Solana a year to do, or every 5 years to do all their transactions that they need. It's like, yeah, sure, it's true. But since it's you can stake it, you can earn yield, right? So why do people hold dividend stocks?
But to which my response to that is the people hold dividend stocks because they're going to receive a dividend, but the way that a company is valued is much easier to measure in that you have earnings, you have the state of the economy, you've got a lot of things outside a bubble of this technology bubble that we live in crypto. You've got a real connection to the real world that has an impact on fundamental valuations of companies, and they're very difficult to value. The thing with cryptocurrencies and so using Solana as an example is that I might be able to buy 5 Solana now, and that's enough for me to use the platform for the rest of my life. And yeah, in future, maybe Solana's $1,000, and to buy one Solana, to buy a year's access or a decade's worth of access would cost you close to $1,000. Okay, well, that's if the value that the network brings to your life is worth it. Well, then what will other subscriptions be by then? It's not. That may be a perfectly valid and fair valuation mechanism, which is that people just buy the token to use for transactions because it costs. There's a certain burn rate depending on how much you use the network, and so potentially, though, that value gets reached at $100 per Solana. That's the usage that when it's used in millions of transactions, it's scaled all over the world. There is enough demand to meet everybody's usage at $100 per Solana. That might be the case. And if all of the speculative valuation has been driven out of the token and it's purely then priced at its utility, that utility would then be a function of its user base and a lot of fundamental metrics that we kind of trying to use and learn about and how these value cryptocurrencies. This is still a growing field of data sciences, how to actually study and value chains based on their activity. But it's clear that activity is a fundamental requirement for a chain to hold its value long term. And so basically everything except Bitcoin is still under development. There is nothing, I don't know a single product, Bitcoin, Litecoin, a handful of OG coins that just went, okay, yeah, I'm done, Doge. But near enough every coin that we're looking at, or token or project, whatever word you want to use, these are still under development. These are essentially companies with CEOs that have developed, they have developers that sit there and they're trying to build this thing. And so, how is it any different from a stock in that sense? You're holding it in the hopes that these people do their job. And this is the entire argument of the SEC, is that, well, people are holding them and using them exactly like stocks. How are they not stocks in that sense? And there's a case.
That's why I say the different, like the actual difference is that, like I said, it's like the token the coin is an actual utility coin. It's made. It's the point of the token is to, or the coin, in Solana's case, is you need it if you want to use our product. Same way you need an Apple iPhone if you want to use the Apple Store and all the applications in there. It's the same thing, right? So you don't need Apple stocks to use an iPhone or the App Store. Like, you don't. So what's in that, in that case, it's a huge difference, right? Arguably there is, you can almost say it's no speculation. It's just, I need it for utility. Sorry.
Well, there's if Apple stock was tokenized, then customers would be able to buy Apple stock and then use it in order to pay for things on the store.
Yeah, let's go. Put it on Solana, dude.
Well,
it could do it. Why not? Actually, that would be a nice idea. Let's tokenize all the stocks and see what the transaction rate will be.
Tokenize. This is kind of the thing that I think people don't quite understand, is that the main reason that I invest in it, or I trade, I have all my bots, all my strategies set up and oriented around crypto, is because it's way easier to get set up and start trading than it is in the real world. I could put all this into MetaTrader and start trading stocks, but, well, they're not 24 hours. They're not. There's just a whole host of other issues and things and reasons. And I'm going, well,
there's a lot of things in the way.
This is a volatile asset class. This is something that has got a potential of large returns. So, I'll just stick to this market. And so it kind of makes you not really bother about other markets because, it's just too much of a hassle. If you could actually tokenize all these stocks and bring them into crypto, then
the question is, then let's speculate here for just a second, right? Or dream up some scenario here. So if, let's say, Apple were to tokenize their stock and make it into if you want to, you know, buy an application or an app store, you have to do it with a piece of stock or whatever. Would they? So they would likely put it on, and they would probably make their own chain, right? Like, well, they can
Well, so
the Apple blockchain rather than putting it on Solana or whatever. Right?
Yes, they could. It's potential. I'm quite surprised that there aren't more proprietary chains right now. I'm surprised, and I think that's something that will potentially grow in the future, is that you will have enterprise chains where Apple, will make their own blockchain, and they'll make it just for an ecosystem, for their own ecosystem, and it will just be bolted onto the App Store. It will be used for Apple Pay. It will just be used for an entire. This would be a chain that had 2 billion users immediately, day one.
Yeah.
And so they could just put some of those tokens available. They wouldn't. Maybe they do an ICO just because they can. Would they need to do an ICO? I don't know. They could just simply hand tokens out as rewards. So basically, whoever
could they? Because they would, if it's tokenized stocks, then they couldn't really give them out. Right?
Well,
that would be
it depends if they actually tokenize
diluting
the
stocks,
stock.
right?
Well, they could just tokenize the stock, but then put I'm talking about them actually having a chain.
Yeah. Oh, so yeah.
They would build a chain, and then the stocks would then be put on the chain.
Right. So, yeah. Okay. So they would make their own chain, and then they would tokenize their stocks on their own chain, right?
I mean, potentially if they've.
I mean, fair enough.
Ambition.
I think it might work actually.
I've already thought the likes of Uber, they could make their own chain. Where
everyone can make their own chain, man.
Well, yeah, but I mean, I'm talking about a useful chain. If you think, what does every single Uber driver and every single Uber user do? They pull out a mobile phone in order to access it. So why not have the Uber app being the miner that basically processes the transaction?
Mm-hmm.
So the number of users would be proportional to the amount of processing power available for the app.
Yeah,
like this sort of thing will happen, and so it's just a case of who takes the first step. Because
we can make a Crypto Talks chain if you want, and do whatever.
Oh no, I had an idea for the video gaming one.
Yeah, we have like 4 half-written white papers, don't we?
We do.
So
we're so bad at finishing anything.
Well, if we have an idea, we write it down and then we look at it later, right? Okay. Let's kind of get back to it was fun to speculate on the Apple thing there. That would be kind of cool though. I would hope they put it on a chain. I mean, instead of making their own, but knowing what type of money they could make by making their own chain, I think they probably would.
I think it's more. I would say it's more control than.
I would say so.
Yeah, than money.
Yeah, it would be adopted either way. So it's like. Yeah, they can do whatever they want. I think it'll be just fine. So let's see. I want to look at the Twitter post that we looked at a little bit earlier here.
Sure.
Let's see what we can do with this, because here is you can't see his name because our logo is there. It is the Kobe letter. Yeah. Whatever. I'll put it in the chat here, just because I don't want to not give
letter. Yeah, you can see it in the handle.
You can
Twitter.com. You can see it in the address bar.
I want to make sure that I give cred to people that post things, because I would hate for people not to give me cred or you cred if we do something cool. So anyway, looking at this, it says breaking. New home prices just crashed by the largest amount on record, down 18% over the last year. So it's right down here. According to Reventure, this is the biggest annual decline back since, I guess 1965. Yeah. Even in the worst month of the 2008 financial crisis, the biggest decline was just 15%, which is right here. The worst part of this is new home prices are still up by 24% from their pre-pandemic levels. We're going to look at that. I think, Rob, you found. Did you find that? A chart.
No, not so clearly. But either way,
I'll look for it if you can. And then mortgage demand is hitting its low since 1994, and affordability is at all-time lows. Builders are in trouble. Yes, they are. The average selling price for a new home is down almost $90,000 since last year. Yeah, it's not looking great, is it? I mean, this is the biggest jump year over year since forever, basically. It's like,
yeah, this is the effect of rising interest rates.
Yep, this is what we've been talking about.
This is completely inevitable that if you have a market which is priced for a population, because remember, it's not about individuals. People always talk when they talk about housing at an individual levels. Oh, I could afford this by doing this. Oh, why don't you buy a house here? Why don't you do that? And it's like, well, even if one individual can do that, the entire population can't, and it doesn't really matter what an individual can do. We could all, you can live in a house with 6 other people, and yes, you can afford to buy it, and that is a feasible way to get on the housing ladder. Is it practical for everyone? No, the whole country can't do that, so it's an irrelevant thing to say. And it's completely inevitable that if you raise interest rates, then the population cannot afford the house that they previously could afford to live in.
Yep,
that's it. It's as simple as that. And so you have all these sales prices that have to come down in order for the customer, which is the population. It's all of us. It's not just one person. Yep. Then the population has to be able to afford what's being built, and so house prices have to come down.
Yeah, and this is something we've talked about for, I think, the whole year of us streaming. Doing these live shows, we've been kind of talking about how the housing thing will come down, crashing down, in various ways.
I do have it up, by the way.
Oh, you do have it. Okay. Let's add that. But yeah, we have talked about this extensively, not very extensively, but it's definitely been in our chats here, and we have been talking about this warning that the big dumps will come.
And yeah, so this is still the average house price still pushing $500,000 per home.
Yeah,
and this it's obviously it's become a meme almost, the millennial house, the inability for millennials to afford a house. But you have to remember the oldest millennials now, they're pushing 40 years old. Me and you are both in our mid-30s, and so there's only a certain amount of time before the population, one way or another, has to be able to afford these homes, because they're the only people buying them, because the other people who aren't buying them are dead. This is the inevitability of how homes is that they get passed on to younger generations, and these younger generations are not going to want their parents' homes, because kids, how many people do you know who would want to live in their parents' home? A lot of people that just wouldn't fit.
Let's take my neighbor, who unfortunately passed away a couple of months ago. Left his house to his kids. He was 86, I think. Passed away, left the house to the kids. They're all in their 40s, 50s, right? They don't have their own need another house. They already have their own homes.
Yep.
And so they just put it on the market and said, let's take whatever we get for it, whatever. And somebody bought it pretty quickly, actually. And they actually got a decent amount for it. But still, it went out on the market for the same price that I bought this house for back in 2019. I think I bought this house.
Yeah.
For the same price. Now, after this huge pump, and they sold it quickly, obviously because it was probably cheap, but still, it's like,
and this is
years of up market, and then still same price.
Yeah, and this is the reality: is that at these interest rates, there is no room for houses to go up.
Mm-hmm.
And even at zero interest rates, house prices had a significant headwind. However, they were being pushed up because it was free money for everybody. Anybody could afford a mortgage. Yes, okay, yep, 2%. So people could afford it because it was cheaper than renting. So because it was cheaper than renting, people put the rents up, and now everything snowballs, and people are sitting on this pile of over leveraged debt, going, "Holy shit! I'm paying $1,000 a month in interest to the bank." And
and it was 400, 2 years ago when everything was fine and dandy, and then kill switch, and now people are in trouble, unfortunately. I did see another chart, by the way, the excess savings. I don't have it here right now.
This is a good chart, that.
If you happen to be able to find that quickly,
it may be on here.
But what we noticed about that is that it's going down hard, and at this point, I think it was American numbers, and it's about to go to 0, which means that people are going through their savings to be able to afford to pay mortgage payments, maybe, buy food, fuel for their cars and everything. And, obviously the last thing that they're going to do is, fail to pay their mortgage, because the home is the most important part. So, seeing how the car industry, used cars have gone down a lot, and now we're seeing this in new homes going down hard. And
here's a nice chart, actually.
All right,
it's not the one that you looked up, but this is personal savings versus the pre-pandemic trend. So the green is what's considered excess savings, and the red is a drawdown of savings. So the green is periods where we were saving money because there wasn't much else to do, there wasn't much to spend our wages on, and a lot of people had it incredibly hard during lockdown, during the pandemic. A lot of people got on just fine. I had a job, I carried on doing my job, nothing financially got worse for me, but for a lot of people it really did. But now we're in this reverse scenario whereby anybody who did have savings, a lot of people, because of these interest rate rises, because of the cost of living, are being drawn into having to draw down on those savings, and eventually they're going to run out. And if we've already had 2.1 trillion accumulated above the trend, and now we're 1.6 trillion down, then and I don't know when this data actually is from. That was in May, so we've things are worse than things are definitely worse than this, and we definitely are still drawing on those savings. And so, as mentioned, the student loan forgiveness period for the US is now up. That's lumbering something like 70 or 80 million households with an average of $300 to $400 a month. Anyway, that's average. So
that's a hefty chunk.
You can essentially extrapolate that to every American household having an extra $100 bill, every single household in the country. And if you actually think about what effect that would have, when you consider, the richer people can ride that wave no problem. They can afford to cut back. Poorer people really can't afford to cut back. And either way, it doesn't matter whether you can afford to cut back or not. If you are now spending money on something new, or something that you weren't previously spending money on, that's money that's discretionary spending you cannot spend elsewhere. And so that money has to come out of the input to the economy. There's no choice. The money doesn't exist to do anything else. And so savings are kaput. Interest rates are now being held after historic rises, and
as a result,
eventually people cannot pay their bills.
Exactly. And I mean, just looking at this is the aggregated inflation rate in the United States. It's 23% more expensive basically to be alive since what is this? 2020? April 2020 is the bottom here. So since then, or since actually over here, it's February the 1st. It's 23% more expensive just to exist in the United States, basically. Nice. If you thought that was bad, here's the UK. It's a little bit more.
Yeah, I think it's even
It's
the
50% worse than America.
yeah, and that's
Yeah,
but
it's rough.
but at least we can. I don't know. I can't even remember any
At
of the
least you have
goddamn.
a
I can't
better
remember.
accent.
I can't
What?
remember any of the lies they told to get us out anymore. Bendy
Oh,
bananas, make our own laws about cucumbers or something or other. I don't know.
what? Okay. Well, yeah, and for everybody here who's in Europe, I would say I don't have the exact aggregated numbers of the European zone itself, but I would assume it's
It's bad.
fairly close to what the UK is.
So, yeah.
So there we are. Congratulations.
So speaking of interest rates, may as well put the yield curve up. So
It's up.
It's up. Yeah. So this is the 10-year yield of this, so the US Treasury, the 10-year yield minus the 2-year yield. So whenever you hear people talking about the yield curve, this is what they're talking about. And essentially, we have this situation known as yield curve inversion, wherever the 2-year yield is higher or yielding more than the 10-year, that's known as an inversion. And typically, when these yields happen, bad
Returns.
things, as in recessions, tend to follow.
Yeah.
Somewhat reliably. And you can actually take this chart all the way back, and it goes all the way back for decades more. This is an incredibly reliable recession indicator. Yeah, we did briefly touch it there, but
That was the COVID.
it was the COVID
stuff.
crash. But yeah, things were bad things were about to happen anyway. But
Oh yeah, it was
either way,
heading down.
all of these inversions are nothing compared to the absolute monstrosity that we're seeing at the moment.
Yeah.
And yeah, there's, for people that will doubt a recession is coming, then where's the money going to come from to sustain us? This is that's the question for anybody that says, we're not going to have a recession. Is you're going to have some really new catalyst for economic growth. And people will talk about AI and stuff like that. Is that AI will, it'll add some tailwind, it'll push us along. It ain't there yet. As much as we'd like to think that we're all AI masters because we've asked it for the odd thing, asked ChatGPT for the odd thing, it's still a fairly niche application. My work of just talking about getting a system that we can play around on. There's no products, there's no actual innovation that we're using that's going to save us hours per day. So yeah, there's what war is that maybe that's gonna be the economic spark.
Well, there's already 2 going on, right? So
yeah, we can have a few more, right?
yeah, hope not.
No, that's it. This one thing that war certainly, regardless of who it is and causes, it adds uncertainty, and uncertainty when we're at periods like this are good. Yeah, uncertainty is it's one of the things in FUD that that nice big one is uncertainty. And yeah, it doesn't mean that things are going to fall apart tomorrow. This is the thing. As things stand, there's a fair amount of reasoning that this stock market rally is going to carry on for a while. Is this a sustainable push into a long-term bull market? Does anybody really think so? Does anybody think the stock market's going to continue to gain 10s, 20% on the back of whatever it is that they think is going on right now?
It feels like this time, people say, this time it's different and all that. But it kind of is, because it's much worse with some numbers. But then other numbers, like GDP, is looking good all of a sudden. And it's like, what? It's everything is kind of skewed, because I think the reason to that might be because we were going down, as you can see here on the yield curve, for example. It was going down, but we're about to go into like bad times. Then super bad times with COVID happened, and they just flipped a switch to try to kind of fix that real fast. And they kind of did. but they just moved,
Just move the
the
problem and made it
trend
worse.
line. If you make a trend line there, like through that whole downtrend, it just lines up to where it was gonna go anyway, right?
What, as in?
Yeah,
Like,
from there, just just straight through the whole thing, like the median, basically.
Okay.
Just straight through it. Just straight through it.
I was just doing that, but okay.
No, I meant the bottom.
Oh, the
The
bottom.
bottom. So if you just pull it on the bottom, so you can see it just
Okay.
lines up anyway. It's like
Yeah.
the whole spike was just like, oh, we fixed it, and then oh no, we didn't, and yeah, so things are kind of skewed, I think, because a bunch of numbers are saying good, a bunch of numbers are saying super bad, a bunch is saying doomsday, and then it's kind of like markets are going on as it just a regular day almost.
So it's kind of the problem is
weird.
it's just the fact that things take time to deteriorate. So what for starters, what's the catalyst that's going to break things? There's no things can get bad progressively for a long time without breaking, but there's always something that starts it off. In 2008 it was the housing market. In 2000 it was tech bubble. There's always something that starts it off. Bitcoin has had catalysts for bull markets and bear markets. They would have happened no matter what. There was nothing that was going to stop the overall movement, but the path was dictated by certain events, and that goes for the real world, more so. And so it could be anything. The Chinese housing market is the big and obvious glaring one at the moment that is on the verge of sort of collapsing, because it's a functional Ponzi scheme. It is a Ponzi scheme, and the home builders rely on new people buying homes that haven't been built yet, getting mortgages, starting to pay the mortgage on just an empty plot of land, so that the mortgage builders can build their old houses.
Be built,
Yes, and they're relying on this system to keep themselves going, and this reliance to just keep building new homes. And it worked brilliant for several decades, because China had an awful lot of infrastructure to build, an awful lot of building to do. Does it need to sustain that amount of building in the future? Well, no, because the population is now essentially peaked. It's now started to decline. There is no way that they can build their way out of a problem anymore. And so this issue of house unaffordability applies to China as well. Now, China, they capped their bonds at much lower yields than the US has done, and as a result, that then starts to affect their currency. Because why would you hold Chinese currency if you can make more profit on the US currency? And so all of this has this overall effect that if the Chinese population can't afford the homes, they stop applying for homes, they just decide that they're going to opt out of the market, then this Ponzi scheme then suddenly falls apart. And if that's what's the catalyst, and the Chinese manufacturing sector falls apart because of it, because they have a full-blown recession, that's coming to the rest of us. That comes mostly via inflation. That will come via other sort of a lot of supply shocks. People not be able to get stuff, and so people will have to pay higher prices to be able to source goods from elsewhere, and that is inflation, and that will drag us down. So this is the problem with inflation, is that it can come in waves, because you don't know what the source of it is going to be.
Precisely.
In the event that China has a meltdown, we already know how they're going to react to it. They're going to print their way out of it. They will print heavily, and so there you go. Suddenly we're now talking about having a global recession, and then going, oh, well, printing money, isn't that good for Bitcoin? So we know that, this is one of the reasons we know all paths lead to Bitcoin. And that's a
nice way to end this stream. All path leads to Bitcoin. I mean, I am a firm believer of that, that thesis. But we're coming up to 45 minutes here, people, so we're gonna have to start rounding this off. I have some stuff that I unfortunately have to do after this, but It's nice to sit down, talk a little bit. I like these talks, man. It relaxes
Good
me.
talks. Yeah.
Yes. Anyway, if you get relaxed from listening to us talk as well, make sure you leave a like, subscribe, the notification bell thingy, put that to all, and join the Discord. That's where we hang out. That's where we're gonna go after this, as always. And you'll find a whole lot of help there if you're trying to learn some stuff. Not just from us, but from other members of the community as well. So make sure you join it. Right. Link's gonna be in the description as well. So, all right,
Bear
cool.
in mind, if there's ever anything we don't know, we'll learn it with you.
Oh yeah, for sure. That's fun. All right, cool. See you later. Bye.
Bye.